Hello, everyone, and welcome to the Smart Women Savvy Money podcast. Our sessions are released on the second Thursday of each month, except December, since ladies, we are all so super busy. However, you can check out all of our previous sessions by going to our website at urbanwm.com to view and hear our webinars and our podcast. Thank you for checking in on this very important topic, sustainable investing to the next level. And this year, as many of you have heard, has been a hot mess. There's been a lot of negative things that have happened, but the negative things have helped us to look at the highest end of where we need to be, the next normal. I'm super excited and inspired for our speakers, two amazing ladies who are high-end roles with Impax Asset Management, a global leader in the sustainable investing world. As you may know, last month's podcast about ESG investing and how the desire to align one's values with their investments has risen up the ladder. Today's talk is going to raise the bar even more as we discuss and explore another aspect of the sustainability marketplace and how shareholders of publicly traded companies can affect corporate actions, which can drive an agenda of higher ethics. With that said, I'd like to introduce you to our speakers, Heather and Emily. So, ladies, tell us, how did you get into this business? There's not enough of us in this business, in this industry. How did you even have an interest in doing this?
Yeah, it's so true. I've been in it for a while, and we're still. I know I'm the only person on my immediate sales team who's a woman, so it's getting better. But yeah, I mean, I don't think originally it was necessarily going to be my field. It wasn't something I studied in school, and then ended up getting a job for a large mutual fund company out of college, and really learned a lot. Really was excited to kind of learn more about business and the economy. Because again, it wasn't really something I focused on in college, but the more time I was in it, the more I realized, I was missing out on, things I was really passionate about, the planet, social issues, and just being focused in sales on the bottom line, and returns just wasn't as appealing for me over time. So it took a while, but I did find my way to the wonderful world of sustainable investing, where, we get to focus on people, planets, profits, and I get to have really engaged conversations with great advisors like you, Renee, and others around this great space. So for me, finance was a good entry point. It's really important to understand how the markets work to really understand how to talk about sustainable investing. But for me, making my way to this space has been a great fit, and getting to work for a firm that does it 100% across the board and has since day one is a great match for me. So glad to have found my place here.
Excellent, excellent. And Heather, oh my goodness, you're way up there at the top, girl. So tell us all about you.
Well, so similar to Emily, I have to make a full disclosure. I never, thought I wanted to be in finance, and to be honest, I was pretty adamant that I didn't want to be in finance. And so I very specifically avoided business classes as an undergraduate, and I majored in political science. I worked in state politics here in New Hampshire for a couple of years, and then I decided that I didn't want to do that for the rest of my life, and that maybe I needed a more rounded education. So I went back to school for my MBA, but still not really knowing, exactly what I wanted to do. And I certainly didn't know that sustainable investing existed. It wasn't covered in any of the curriculum. This was really before sustainable investing was enjoying the popularity that it is today. And so I was very fortunate to find my way to Impax in 2007. And I remember researching the firm and the work that it was doing. And I was just really excited to know that there was a way that I could apply what I had just been learning in business school with the issues that, were personally of great interest and importance to me. So, climate change, diversity, human rights, and things like that. And I always joke that, I wish I could go back and do undergrad again, because I think now sustainability is much more integrated into the curriculum, and you can actually study sustainability as a field. But even so, I would say that things have, worked out pretty well. And I feel very fortunate to have been in the sustainable investing space for my entire, career thus far, and, have gotten to see the innovation that has come along with it. And so it's just been a really exciting journey to be on.
Excellent, excellent. And the interesting part is because, as you know, we specialize in working with women. Women always raise their hand and they say, I
Hmm.
want to align my values, my ethics with my money. So it's been really, really important. And I'm sure you've seen that rise quite a bit, which we'll talk about, that there are a lot of people who are interested in that because that is the one thing that this year, the one positive thing I think this year has created. So with that said, so Emily, before we take this to the next level, can you provide us a definition of what sustainable investing is and what it means at Impax?
Yeah, that's a great question because you could see Heather and I couldn't get through our initial comments without saying sustainable investing, and I might have used 5 other terms and I don't even realize. So there's so many terminologies in finance and in sustainable investing alone. So some of you might have heard, ESG investing, values-based, faith-based, green investing. Sustainable investing you can think of as really an umbrella term that covers all those various areas and flavors. And the most basic sort of definition is that, as investment managers, as stewards of your assets, when we make any investment decision on a company, we're looking not just at the traditional financial metrics, which are very important, but we're also incorporating another term you'll hear a lot, E, S, and G, environmental, social, and governance. And I always say, it's only 3 letters, but Heather can tell you it's a lot of data that goes under each of those 3 letters. Simply thinking about, is a company thinking about long-term risks? And those risks can be associated with their environmental footprint. Are they thinking about climate change? How are they thinking about their workforce and diversity? How is the company managed? How is the CEO paid? So for us, it's really important. And we really feel like you can't truly value a company and have insight into how it's going to perform in the long term without involving these E, S, and G factors. So for us, as a firm, we've done this since the start back in 1971. And so the space has evolved, the data has evolved, as Heather can tell you. But at the end of the day, we really feel like even more so today, it's very important and necessary to evaluate a company's environmental, social governance profile to truly understand how it's going to perform.
Excellent. And especially 1971.
Yep.
That's good. That was there was some interest in that also. So just another question then, can you explain how do you choose companies? I mean, what is your scoring process, your analysis work?
Mm. Yeah, it's another great question too, because there's been such a plethora of ESG labeled funds and not everyone does everything the same way. And not every company
Yes.
like us does it 100% across the board. For some, it's just a pocket of what they do. We at Impax have an internal team of sustainability analysts, Heather being one of them, because with this ESG data, you really have to have a team that understands how to interpret it and understand how to interpret the nuances with it. Because really it's about understanding what's most material to a company. So we have to understand, out of all those environmental, social governance criteria, what's most important to this technology company versus an energy company or a pharmaceutical company, and being able to kind of analyze apples to apples, if you will. So for us, it's important to have an internal team that's doing this work. And a lot of the work too, as Heather can tell you, it's not just handed to us. Here's our ESG profile. We have to do a lot of conversations with companies, a lot of analysis, a lot of dialogue, a lot of digging. And so for us too, we have some important proprietary tools that we use at our company. We've got a sustainability scoring method, which Heather is part of, which goes in and actually ranks what we feel is the ESG score of a company that can help inform our portfolio managers and analysts when they're looking at what companies to put in the funds. We also have developed a really important tool called our Impax Lens. And it was actually created out of our London office. And it was really interesting for me to learn that it's a tool that really looks across the whole entire market, the whole economy, all the sectors and subsectors, and really says, all right, looking long term, where do we really see long-term growth opportunities and where do we see areas of risk? And it really helps us be able to identify kind of, where we want to put our assets and what companies we want to focus on and what areas we want to avoid. And the tool was actually created not just from our portfolio analysts, but our portfolio managers, public policy experts, sector experts, and we even actually have a climate scientist back in our London office. So it's a really very detailed tool that we spent many years analyzing, and it really helps, again, our portfolio managers decide where to look and where to focus their research on. So a lot of really interesting and unique differentiated tools that we've got.
Oh, great. So I know that you are all global in scope. How many offices or countries are you actually in?
I know. I feel like I forget that there's world outside of my lately, but we actually, so Heather's back in our New Hampshire office, which is actually our home office.
Yeah.
I'm in California, which is a satellite office for me here in San Francisco. And then we've got about 55 investment professionals who do operate globally. So we've got an offices in Europe, in Hong Kong, and then here in the US.
Wow, that's fabulous, especially, being in a sustainable investing, because there's such a difference in, these countries,
Right.
How they view things, how they want to do things, what their economic outlooks are. So Heather, is it fair to say that all ESG funds do advocacy as part of an ESG process? And can you talk about the tools that your teams use in order to, when you do it in engagement work, how do you go through the selection process?
Sure. Well, I think the ESG space and the sustainable investing space has really grown from a place of engagement, right? Its roots are really from, wanting to do better and to drive positive change. And so, engagement is stewardship, it's dialogue, it's partnership with companies, and it's about us as investors using our votes and our voices to influence for stronger and more resilient companies. And we want to drive positive outcomes and results. So at Impax, engagement is really a tool for us to increase our understanding of how a company is managing its most material sustainability issues, how it's thinking about these issues, how it's evolving. And it can really help us inform that company analysis, because as Emily said, not all that information is out there for us to see. It does require some proprietary work and some digging. And it can be interesting to see how companies respond to engagement, and it can provide real window into their attitude, their philosophy and their outlook. And when it comes to, sustainability issues. That said, engagement is also an opportunity for us to suggest changes in policies, programs, or disclosure at companies that, that we think would make companies better equipped to proactively manage some of their material ESG risks and mitigate issues more effectively. And in terms of the tools, there are multiple avenues through which we can pursue this engagement. So the primary way that we do it is just through direct company dialogue. And that's exactly what it sounds like. It's us reaching to the company with a phone call or an email and trying to get in touch with the management company to talk about, a particular ESG issue. This work, individually, but also in collaboration with other investors, because we think that working with others can help elevate issues at companies, and it allows us to reach a more broad swath of companies than we could, just on our own and just focusing on the companies in our portfolios. So in addition to company dialogues, we also file shareholder resolutions, we vote proxies, and we also conduct public policy advocacy. So working with regulators on sustainability issues. Sometimes, unfortunately, efforts to get a dialogue going with a company might not be successful. The company might be non-responsive, or maybe we're just not making progress on a particular issue. And that's when we would move to the more formal process of filing that shareholder proposal. And that essentially means that we're just making a request of a company to take action on a specific ESG issue. So it could be asking a company to adopt a greenhouse gas reduction target. It could be asking a company to conduct a gender pay equity assessment. And the proposal will be put forth to a vote by shareholders. So, it does have some teeth to it, and we find that it's an effective way to get companies to come to the table. So in the vast majority of cases where we have filed a resolution, the company has then reached out for a dialogue, and we have been able to talk with the management team. And oftentimes we're able to negotiate a withdrawal agreement under which the company agrees to take certain steps to address the concerns or the issues that were raised in our proposal. And in exchange, we withdraw the proposal and withdraw our request to have it voted on by shareholders at the meeting. But, I think no matter the tool or the method that we use, the objective is always the same. And that's to dialogue with management, because we want to build relationships with companies, because we want to be in a position where, we can have conversations on an ongoing basis where they can learn from us, we can learn from them. And that's particularly important as new sustainability issues, emerge over time.
Right. That's a lot of work. It's almost like you have to have somebody internally, I think, at those companies to really know what their culture and their environment is and how they're really working through those things. Do you tend to also identify companies that are really having a tough time and you say, look, they need to change their models of how they're doing it? Or do you really just kind of more or less focus on those that are at the higher end of being, that have sustainability? And just giving them some ideas about how they can improve it.
Yeah, that's a good question. I mean, we don't own any companies to specifically pursue engagement, and that is where the collaborative engagement can be helpful, because you don't necessarily have to own the company to join work with other investors. And so that's why we like those types of engagements. But there's certainly companies in our portfolios that are not as strong on certain aspects of ESG than others. And so those are the companies that we want to focus on. But we think it's also important to focus on the leaders, because they're the ones who can set the new industry standards and continue to push the envelope and push the needle forward. So, it's really important to not, just say, oh, this company is a leader, so, that we don't need to ever engage with them or push them. I think, in fact, those companies can be in a better position to actually, do some of the more innovative things, that we want to see from companies.
Right. Well, hopefully that number will continue to build out and increase. We'll get bigger and more companies that fall in that space. So can you share a specific example of a company that you were engaged with and how, the whole process evolved from start to finish?
Sure, absolutely. I like to talk about company examples. I think that stories can really bring that process to life, and show that I like to think of engagement as more of a journey almost than a destination. It's certainly not, one and done. It's not one meeting or phone call. And so I think our engagement with T-Mobile really kind of demonstrates sort of the full arc of what engagement looks like. So we first began engaging with T-Mobile on board diversity in 2015. We had used our proxy vote to withhold support from directors on the company's nominating committee. They had just one woman on the board, and so we didn't feel like the company was as well positioned on board diversity as it could be, and its diverse representation lagged some of its peer companies. So we reached out to the management team and explained, the rationale for our vote, and we had a conversation with them, and they articulated to us their commitment to, diversifying the board moving forward. So as a starting point, this was a satisfactory conversation to us. And during that same time, our partners over at the 30% Coalition, which is a group working to advance board diversity across US public companies, actually reached out to T-Mobile, outlining some of the same concerns that we had raised at the company. So despite having outreach from us, from other investors, we found that over time, over the next couple of years, board composition hadn't really changed at the company, and the company formalized the commitment that it had verbally, outlined to us when we spoke. So we decided to take the step of filing a shareholder proposal with the company, which essentially we were asking them to adopt a board diversity policy and to report to shareholders on progress in implementing that policy. As I said, it was almost immediate that the company reached out and we set up a meeting, and they also included in that meeting the chair of their nominating committee, which was a signal to us that, they took the issue quite seriously in that they were making their board of directors available for the conversation. So, following a few dialogues with the management team and the board, the company published in 2020 their director selection guidelines, which commit T-Mobile to seeking out and including women and minority candidates in the pool from which the nominating committee selects director candidates. In addition to that, the company also increased disclosure around board diversity, as well as diversity in the broader workforce in their proxy statement. So they actually went beyond what was requested in our proposal. So because the company had taken these steps, we withdrew our proposal. We think that institutionalizing these types of policies in proxy statements and governance documents is an important marker of progress, right? Because it creates accountability and it can be a lever for change. So while the ultimate milestone is going to be, having stronger representation of women on the board, and, seeing that the policy is in fact effective. This was a very good positive outcome, I think, and, just illustrative of the fact that successful engagement often takes some persistence. It takes a long-term focus. And again, it's a long-term relationship.
Yeah, absolutely. And it seems, I know over the past few years, there's been a big focus on gender and getting more women. And now it seems to have risen to a broader base of people of color now also, and women, and really being more in the diversity and inclusion space. So, but that'll be another conversation. So we know gender pay equity is needed to truly have equality in the workforce. So how do you work on this with these companies? Are they really paying attention and they're making the difference in their pay scheduling? Because I still see that women in general are still being paid less than men, which is crazy. And with women of color, it's even less. We're only being paid, about 60, 65 cents on the dollar. For women, Caucasian women, it's 75 cents on the dollar, but it's still ridiculous. We have the same level of education, experience. So what are you guys doing about gals? What are you gals doing about that?
Yes, it can be discouraging, when you look at the statistics and, the fact that there is a persistent pay gap. Just earlier this week, it was actually Latina Equal Pay Day, which is the day that Latina women had to work through in order to earn what white men earned in 2019. Equal Pay Day for white women was in March, Equal Pay Day for Black women was in August. So huge pay gaps that we're dealing with, and it's a very complex issue. And Impax was one of the first investors to call on companies to conduct pay equity assessments by gender, race, and ethnicity, and to publicly report the results. And we weren't doing this not only because it's morally the right thing to do, but because there's a business case, right? I mean, studies have shown that pay equity is a key tool in driving diverse representation at companies. So companies that actively manage for pay equity have better diversity outcomes. And we know that more diversity leads to better company performance. So it was very interesting. I think the first conversations that we were having with companies on this topic was a little bit uncomfortable, shall we say? Pay is always a little bit of a taboo subject. There's lots of secrecy around it. And of course, no company wants to think that they have a pay equity problem. And I will say that, by and large, companies are not setting out to pay women less than men. But that being said, you can't effectively manage what you don't measure or what you don't look at. In the first year that we were doing these engagements in 2015, one of our first learnings was that, many companies were at least thinking about pay equity. And the extent of the processes that they had in place to support and promote pay equity certainly varied company to company. But one thing was common at all of them, and it was that they weren't talking about it. And they weren't talking about it even with their own employees internally. And one of the first engagements that we did was with a technology company. And I remember being on the phone with them and they said, well, of course our employees know that we pay them equally. And I said, well, but how do they know that if they don't know that you're doing these analyses in the background, and you're not communicating to them that pay equity is a value at the company and that you do in fact have a process to manage it. And I think that was a little bit of a light bulb moment for them, because I think they just hadn't considered it really before. So, the focus was really with working with companies to help them develop their disclosure and how could they tell the story. So, first we want to see them articulate that commitment to pay equity. We want to see them outline the processes in place to support that commitment. We want them to disclose the results of the analysis, so quantitative numbers. And then we want them to discuss, what steps are they taking should they identify pay gaps. And so that was sort of the transition there for what we were focusing on and how we were thinking about company disclosure. I think one of the most interesting aspects of this work has been that pay equity is not just about pay equity. You can't talk about that issue by itself. It's really about equality of opportunity. It's about looking at promotion and hiring rates at companies. It's about companies looking at performance reviews to ensure that they're free of bias, which can be unconscious. And so the conversations that we're having with companies have really become, much more robust. And I think that to me is a signal that we're moving in the right direction. Companies are thinking about it holistically. There's lots of work to do. Pay equity is still one of the most underreported diversity indicators that we look at. But when you have large companies like, say, Apple or Amazon, which are two companies that we've engaged with, when they say that pay equity is important and they move to close pay gaps, other companies take note, and you have that domino effect of raising standards, through the industry. So a lot of work to do. Again, the stats that you mentioned are, can be depressing and feels like we're not moving the needle, far enough. But from where I'm sitting, from the conversations we're having with companies, I think we are moving in the right direction.
Thankfully so. So how do you work on this with the companies you invest in? And are you really finding some success?
Yeah, so I think, again, it's all about getting that dialogue going. It's about building that relationship. Discover Financial is a company that we've engaged with on this topic more recently. And they were another company that, when we started asking the questions, they realized that they had a positive story to tell their employees, their investors, and their other stakeholders. And so their first step was to put out that commitment to pay equity in their sustainability report. And they outlined what the process was that they had to, assess for pay equity as they were making compensation decisions, and what were the checkpoints to make sure that inequities weren't creeping into the system. And they also explicitly said that, should they find, differences in pay that couldn't be accounted for based on what drives pay, they would make, pay adjustments. And then the second step was for them to, go ahead and do their analysis. And the following year, in their sustainability report, they released the quantitative results, which, underscores their commitment. It gives it more authenticity. And that's really sort of the trajectory that we want to see from companies. We recognize that, when we come in and we ask a question or make a request, often companies can't, hit everything all at once. This isn't something that can be solved, overnight, because as we said, pay equity is complicated. And if it wasn't, we would have figured out how to get rid of the pay gap by now. So those are the conversations that we're having with our companies. And, we continue to, push them to make their disclosure more comprehensive as they get the data, as they get the processes in place.
All right. Well, you want to talk about diversity and discover?
Yes, so Discover Financial is the company that we engaged with on the pay equity piece. And we would consider that to be a successful engagement. And part of the, I think part of the nice thing about these engagements is that just because we reach the end and say, okay, well, now you've disclosed that quantitative assessment on pay equity, doesn't mean we never talk again, right? We're going to continue to follow up. We're going to look for, this next year, we're going to look to see that they repeat the analysis, report the new results, to make sure that, they haven't moved backwards or things of that nature. So it can be, it's a great learning experience for us when we have these long-standing, long-term relationships, because we can really see how the company changes over time.
Yeah, I think that's a good point, because I've heard Heather and the team, and Heather's been doing this work for so long. You can kind of see how, different issues take longer, but companies, I think you'd agree, Heather, are, maybe not on every issue, but overall are kind of more receptive to these types of conversations, because I think more and more, as we're seeing play out right now with a myriad of issues, companies realize their reputation is facing risks around these issues, their financial bottom line, when you think about the cost of replacing employees, or you think about the cost of litigation when there's, issues at the company. So it's really interesting that we're able to kind of raise these issues, but I think it's kind of an exciting time where more and more companies are standing up and realizing it's more than just putting something on their website that they're in support of this or that. It's really companies like us forcing them and pushing them to be more transparent around these issues, because that's important to employees, it's important to shareholders, and really, I think, important to the company's bottom line.
Yeah, absolutely. And, I think that this other element of consumers now really saying, oh, if you don't have D&I in your process, or you've got this pay inequality or whatever, we're not going to do any business with you. And that's because we're a consumer-driven economy. I think that's the only way that a lot of these companies will get it, that they will say, okay, well, maybe we weren't focused on sustainability or ESG or whatever, but we better do it now because that's what our consumers want us to be. And that will be able to push this agenda down the road a bit more aggressively, which again, like I said, this year it's been really a tough year, but really a lot of bad stuff, but it's also raised the bar and interest in being much more ethical, being, more focused on sustainability and, and making sure that your life and your lifestyle is aligned with that. So that's good to hear that. And I think that one of the challenges that that you gals will probably see, is because you're going to be a lot more busy, I think, because there has been such higher interest in this. And so, really being able to identify the right companies. So how do clients learn about this work? And do you have any reporting that your team provides?
Yes, we do. So every year we produce an engagement report that highlights all of the work that we've done on multiple topics related to ESG across all of our funds. Last year, we engaged with 159 companies, so including companies in our portfolios, as well as some of those collaborative engagements. That's available on an annual basis. We also do quarterly updates around some of our most recent engagement work and conversations with companies. And then we do, we frequently write blog posts that will go in depth on an engagement. I think we have one on our website right now about T-Mobile. There's some case studies around some work we've done with Oracle. So we obviously want to make this information very available to our clients because, as I said, I think the stories can help, they resonate with people and they can really show the impact that we as investors can have, not by just investing in these companies, by continually engaging with them and, continuing to push them forward, making sure those leaders keep leading and make sure those laggards are catching up.
Exactly. That is great. So that information, and what are some of your social media sites that people can go to and view? Are you on?
So
we
we've
can
got
go
our
to the website to see,
the website. We have a LinkedIn page as well. Some of our analysts are avid Twitter users. I think it's one of our analysts. I think it's her personal Twitter account, but she pushes forward a lot of interesting articles around sustainability and topics. And I think the best place is probably our website, because as Heather said, her and her team, I don't know where they find the time, but they are always writing some really interesting topical blogs about advocacy, engagement. And I think, like you said, Renee, there's been so much that's gone on this year with the pandemic and everything. It's really brought a lot of these, issues, especially social and governance issues, some of the things that Heather talked about, really to the surface. And I think it's going to be a renewed focus for companies in how they sort of build back better. So I think that's a great place to start is the engagement report and the website.
Yeah, there's also a link to our Twitter accounts on our website. So definitely hit up the website.
Yeah.
All right. So can you spell out what your website address is so that everybody will know?
Yes, it's Impax, IMPAXAM.com.
All right. Awesome. So, Emily, are you feeling hopeful about the work that your team is doing right now?
I am.
And another question, and with the advisors that you're working with, are you seeing that there's an increase in accessing, the impacts and being in sustainable investing? Are they finding that they're having that request from their clients too?
It's a great question, and this is something we look at year after year. And there's some groups that we work with that kind of study the space. And I think the last time they studied it, they said it was about $12 trillion in the U.S. was invested in some form of sustainable investing, which is about 1 out of every $4. And that number goes up year after year. We actually had record inflows into ESG type assets this year alone. So I know in my conversations, when I first started in this space, I really had to spend a lot of time, encouraging advisors to learn about this topic, to explain what it means, to explain why it's important. And certainly I would have some that said, my clients aren't asking about this. They might not know about it. And so I think clients are becoming even more and more empowered. I think, like you said, driven by sort of their consumer preferences and what's going on, in the environment or politically, to really demand that they want to have their investments aligned this way. And I think that, coupled with great folks like yourself, Renee, that have taken the time to really understand the space and make it a focal point and know that it's issue areas that are important to your client. So while maybe not everyone has come around, I think we've definitely seen a trend where more and more advisors are realizing this has to be part of their practice, because this is really where the economy is heading. And I think, like you said, us having our European offices, we're seeing the growth there even more, where, eventually they feel like they won't have to kind of use that ESG terminology anymore, because it'll just be part of the sort of, mainstream, if you will, investing. So I think we're a ways away here. I think we, there's some changes that have to occur, but I think for us, it's really important, like Heather's been saying, to not only choose the companies, but to admit that there's, no perfect company out there, and to really continue to engage with them. And I think we've had some really positive successes. So there's a lot to get down about this year and lately, but I think when I think of the work we're doing, and I think of the conversations we're having and the engagements that I get to have with end clients, I'm really excited about the direction we're headed.
Excellent, excellent. And Heather, with the companies that you are doing the research on and, providing some advocacy ideas, are you finding that they're much more open to, to not only hearing it, but, and that has been a big problem. People talk about what they're going to do, but they don't do it. So are you finding that they are moving forward and saying, I know you gave us a great example of one that did, that are open to moving forward and doing it quickly, to say, okay, yeah, we have to change our culture. We got to change our environment. We are going to take care of this, pay inequity. So any thoughts or ideas about that? Because this year has certainly, it has raised the interest and for consumers, and I hope for, leadership as well.
Yeah, it definitely has. And I think even before the events of this year, we had already started to see a shift in how companies were thinking about sustainability, were thinking about their culture. When I first started, I would say that most of our conversations with companies were more of the adversarial nature, where spending a lot of time explaining the business case, why you should have diverse teams. And the conversation, though, has shifted, right? Companies now know the business case. They know that they need to be doing these things. And so the conversations are much more collaborative. And I think companies are much more willing to listen to ideas and incorporate our feedback into what they're doing. And I think they recognize that, the marketplace is demanding it. I think some of the hesitation to putting out disclosure is often that the numbers don't look good or not where they want them to be. But, I think we all know that pay equity is not where it should be. We all know that racial diversity is not where it should be. And what we need is an honest accounting from companies of where they're at, if we're going to be able to effectively measure their progress, over time. And I think as companies have disclosed numbers that may be unflattering with regards to pay equity, I think they're seeing that the reaction in the marketplace is actually positive. I don't think most people aren't, pointing at them and admonishing them for that. They're respectful of the fact that they've been honest about where they are, and that's how we move forward. I think is really just putting things out there and showing that the commitments you're making are meaningful. Because I think you're right. A lot of companies are making statements right now, and I do think that it is a little bit different this time, in that they know that their customers, their stakeholders really expect them to make change. And so, putting out a statement without putting out concrete actions to back it up, is not going to go very far.
Yeah, absolutely. Absolutely. And, it just popped in my head that, it's not only consumer based, but from an investor's standpoint too. If you have more people that are interested in sustainability investing, it's going to drive those stock prices up. Then everybody else who isn't, their stock price is going to be flat or go down. And they'll, okay, consumers don't want us, investors don't want us, we have to change.
Yeah.
We need to make that really important, and this year, I always go back to this, I'll go back to this again, saying this has been a hot mess, but I'm hoping that it's so difficult for this year because the rest of the decade is going to be better. We will learn what we need to do in order to step up and change, the way things have been going for some time, for not only centuries, for centuries, not just decades, but for centuries. So I want to thank you so much for your time and for sharing these great, great ideas, because this is something that a lot of people may not be aware of, that there is this ability, not only can you invest in it, but you can make a difference by stating, and stepping into these companies to give them ideas and recommendations about how they need to change the way that they are doing business and their cultures. So I thank you so much for not only your time, but for everything that you are doing in this space. So be safe, be secure, and we will have you back next year.
Great.
Excellent.
Thanks,
All right.
Renee. Thanks, everybody.
Bye.
Take care.
Thanks, Renee.